Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and we are coming to you live in the last full week of 2025. And this week itself has captured what this year has looked like, narrow and in a zone of consolidation. But yes, if you look at the levels, Nifty slipped, it's way below that 26,100 mark as of now. Sensex has also slipped by about 369 points as of now. But yes, of course, thin volumes are expected. Of course, we were expecting, given that the markets have been on a holiday mode globally itself. Volatility also too remains on the lower end as of now. But yes, the market breadth that remains on the sides of on the declines, because if you look at the advanced decline ratio, that remains at 1:2 as of now. But yes, among sectors, it was the Nifty Metal Index that has continued to shine, and in this otherwise weak market, Nifty Metal Index up for the 7th consecutive session. And even realty stocks did well, but right now the realty index has been succumbing to a certain bit of selling pressure. But yes, on the flip side, what did not do well, that was your Nifty IT index. Nifty IT index continues to remain under pressure for the third consecutive day, and there was some lackluster trade that is coming in from the broader end of the markets, because if you look at the mid caps and small caps, both of them have cooled off from their day's high levels itself. But yes, the railway and defense stocks that continue to buzz ahead. Whether it's just a pre-budget rally or the beginning of a new trend is something we'll understand from our experts, which is lined up in the show. But yes, before that, let's take a quick look at the top Nifty gainers and losers. If you look at the gainers, Titan is doing quite well, nearly 2% gains coming in for the company on the back of the company's foray into the lab-grown diamond business, and they have opened their first retail outlet in Mumbai itself. Nestle also doing well with about 1% gains. The stock is up for the second consecutive session. Cipla doing well with about 0.7% gains. The stock is up after 3 days of decline. Hindalco also doing well with about nearly 1% gains. So of course, the entire metal basket has been quite buoyant, and on the back of that, you can see Hindalco and JSW Steel as one of the top Nifty gainers on the Nifty 50. But yes, let's take a quick look at the flip side picture. Shriram Finance cooling off after 6 days of consecutive gains. Nearly 1% decline coming in for this NBFC major. Asian Paint seeing a decline of about 1%. Bajaj Finserv also not doing well with about 1% cut. Tech Mahindra Eternal with about 1% cut. TCS and Bajaj Auto as one of the top Nifty losers. But yes, to understand how the last minutes of the trade look like and how you should be positioned going ahead, I'll quickly go across to technical expert of the show, Aamar Singh, Senior Vice President at Angelone. Aamar, good afternoon. Wishing you a very happy New Year first of all. But yes, the Nifty has remained quite flat this week, but still it's managing to break that 3-week losing streak. But going ahead, what levels are you watching out next?
Yeah, a very good afternoon, and thank you for having me on the show, and wishing you to a very happy new year ahead. So if you look at Nifty, Nifty has been in for consolidation, because what we are seeing in Nifty for at least for the last 3 to 4 weeks of trading sessions, we are seeing Nifty in for consolidation, because some of the sectors, if you see, earlier you had the PSU banks, then you had the IT space, and then you currently have the PSUs taking off. But more or less, the heavyweights of Nifty, except Reliance, which still is strong, I would say, other from the banking space like HDFC Bank, ICICI, they're not going anywhere. So we're seeing a lot of consolidation happening in that space. As far as Nifty is concerned, Nifty did breach and make an all-time high this year, but it's not able to sustain above the 26,200, 300 levels immediate. That's an immediate zone of resistance. But it's the downside 25,700, 800. So it's a 500, 600 point range which Nifty has been into trading. If you look at the structure of the benchmark indices, overall the structure remains positive. I would say waiting for maybe some fresh triggers, and also maybe looking at FII if FII flows reverses in that sense. So we've been positive on the markets, but yes, it has been more of selective stocks rather than the broad-based rally which is there. But at times we do see that the advances are in favor of declines, but more or less we are seeing a balance out here. But we are positive on the markets, and as I said, any dip is a buying opportunity till the time we don't see 25,700 breached consistently on the downside.
Okay, all right. 25,700, that's the support area that you're watching out for. But yes, let's discuss about the Bank Nifty levels as well. They've remained flat this week, remains way below that 59,100 levels. Aamar, any particular levels that we need to watch out from Bank Nifty index itself?
Yeah, see, as far as Bank Nifty is concerned, Bank Nifty is still very strong on the long-term charts as compared to Nifty. Even on the intermediate term trend, Bank Nifty is very strong. But shorter term trend, I would say if I look at compare Nifty versus Bank Nifty is on a weaker wicket as far as the shorter term trend is concerned. That's the reason we are seeing this consolidation in Bank Nifty, primarily, as I said, on the back of major banking stocks. So Bank Nifty, if you ask me, there's not much of a downside to it. So if I look at somewhere around 58,700, 58,000, yeah, 58,700, 800 immediate zone of support for Bank Nifty is there, whereas on the upside resistance is somewhere around the 59,400, 500. So it's a 500, 600 point again for Bank Nifty. But if you ask me, there is a possibility that we could see some sort of correction if Bank Nifty breaches the 58,700, 800 level because some of the technical indicators from a shorter term perspective, they are far exceedingly negative for Bank Nifty as compared to Nifty. So we'll have to watch out for that.
Okay, all right. This is some divergence that we need to watch out for then. But yes, one noticeable trend that is coming in from the broader end of the markets. Your Nifty small cap index has cooled off after 5 days of winning streak. But for so far this week, the small cap index has done quite well. And it's the second week when the index has exhibited positive gains. Amar, do you expect this rally to extend from the Nifty small cap despite today's cool off?
So if I look at the Nifty small cap index and the Nifty small cap basket, I see what's happening is that there was this significant correction across, and then we've seen some pullback happening. So if you ask me from a technical perspective, from an intermediate term perspective, or a longer term perspective, it's more or less consolidation that we are likely to witness. Yes, the recent lows of Nifty small cap index, that's something which should act as an important zone of support. But otherwise, I would say it seems to be in for consolidation as far as the Nifty small cap index is concerned.
Okay, all right. That's the view from the broad end of the markets and particularly for the small cap index. But yes, among the sector movers, it was the Nifty metal index that has bucked the trend today. And so far this week also, the sector has done quite well, up by about 2%. Amar, do you expect the trend to sustain from the metal basket? And what are you liking from the space?
So see, if you look at Nifty Metal Index, yeah, definitely it's in a different trajectory altogether. So if we look at some of the stocks, see most of the non-ferrous stocks have done exceedingly well, and if we look at it from the uh, mm, perspective, so for example, Hindustan Copper has done exceedingly well, metal stocks, and also if we look at some of the other stocks in terms of NALCO, National Aluminium, that again stock is on a tear. And what we are seeing is that somewhere or the other there is this upside move which is being sustained. Secondly, if I look at on the private sector, if I look at Hindalco is again trading at record highs. And if I look at the structure of most of these stocks, they are exceedingly strong. And if I go back in time and see the uh, uh, the levels for Hindustan Copper. So Hindustan Copper is extremely strong, and in 2010 the stock had made a high of almost 658 levels, and then it had corrected again. What we are seeing is that the stock has breached major levels, so there's a strong upside which cannot be ruled out further in most of these metal stocks. Hindustan Zinc is also on a tear. It's trading very strong. So the way Hindustan Zinc has also rallied by almost I would say roughly around 25% in the last month or so. And it seems that the structure being very strong, we could see further upside in the stock. Steel stocks, the ferrous stocks or the ferrous companies are not really doing that well. If I look at Jindal Steel for that matter or GSW Steel, there we are witnessing some correction. But otherwise, I would say you should look at non-ferrous. Again, National Aluminium, NALCO is one stock one can keep a close watch on. Very strong, fundamentally also, and also technically very strong. So any pullback is a buying opportunity. Those who are long, they should stay invested because the stock has broken all-time records and the structure is very strong. So they should definitely hold on to it. These particular stocks.
Okay. Okay, all right. So non-ferrous is something that we need to watch out for. But yes, apart from the metal basket, it was the Nifty defense that has also been one of the top sectoral movers this week. And today also, however, this index has cooled off. But for this week, Nifty defense has snapped its 5-week losing streak. Aamar, coming to you for the defense space, any stocks that you're finding attractive from the current levels?
So if you look at defense, I would say that see defense. What has happened is that post the rally and then the correction, we are seeing some sort of consolidation. So this is more of a pullback because if I look at HAL for to start with, so HAL, if you ask me, it's not going anywhere in a hurry. That's very clear. So it's more of consolidation. If I look at BEL, again one stock had given spectacular returns, but now it's in for consolidation. We could witness the stock consolidating between 380 on the downside and 420 on the upside. So most of the defense stocks are likely to trade in a range. And I'll talk one more about Bharat Dynamics. A similar pattern there as well. It's trading around 1470 odd levels. Seems to have found a base around the 1300, upside resistance around 1600. So most of the structure of these stocks are from a medium term to long term perspective reflects consolidation, at least in the near future.
Okay, all right. That's the view coming in from the defense basket. But yes, let's take a look at, the flip side picture of the markets. That's your IT stocks because they have been remaining under the pressure for the third consecutive day now. Aamar, do you see any reversal on the positive trend that the Nifty IT index has seen so far this month?
See, if you look at IT, what's happening is that the IT stocks definitely had rallied, and also the depreciation of the rupee had helped to a certain extent, and also the expectations that it wouldn't be as bad as far as the US is concerned in terms of business. So I think that really helped the IT sector. But we're seeing some stocks specifically witnessing sharp correction. One is Coforge by almost 1950, 1960 levels. Currently, it's around 1650. So we've seen some sharp correction. Our HCL technology, if you look at it, really hasn't corrected much. It more or less consolidating. So if you look at some of the, or Infosys for that matter, is somewhat positive. Then what we are seeing here is that in terms of persistent systems is one stock which has rallied, but now seems to be slightly cooling off. And some of the technical indicators are indicating that it's in overheated, so we could witness some consolidation. So IT as a sector, I would say that we could witness some consolidation, and I don't see a very sharp rally in the very near future.
Okay, all right. No sharp rally in the near future for the IT stocks. But yes, one theme that has clearly stood out for this week is your railway stocks. They have done quite well, be it the pre-budget rally or even the order win for that matter. And of course, the ministry has also announced certain rate rationalization as well. Aamar, anything that you're finding attractive on charts, and how are you viewing the railway theme ahead of the budget announcement?
See, if you look at the railway stocks, we witnessed some sort of consolidation and some sort of sell-off happening because if I look at RVNL to start with, almost it was trading in last year somewhere around 650 levels, and then it halved to almost 300. Currently, we're seeing a pullback, and the pullback has been very strong over the last, I would say, 4 to 5 trading sessions. The stock is up by almost 30%, which is phenomenal and significant volumes. But the big question is that this could be a pre-budget rally, as you said, but on the upside seems to be capped around the 400 440 level. If I look at some of the other railway stocks, IRCT, IRFC, so Indian Railways Finance Corporation, again, there is this pullback which has been very sharp, almost up by 20%. But looking at the structure, the big question is that, see, these are all trigger ahead of the budget expectations. So I think that's what the rally is all about. But the big question is, how much does it match up to the expectation? So it could be more of going with the flow right now rather than anything else, because I don't see any significant change on the structure of these stocks from a medium-term perspective. So the rally, whether it fizzles out, we'll have to watch out for. As far as RailTel Corp is concerned, similar sort of rally we witnessed by 20-30%. But again, upside seems to be capped for this stock around the 410, 415 level. So you need to be slightly cautious entering at the current levels.
Okay, all right. Slightly cautious entering the current levels for the railway stocks, but definitely in the past 5 days, we've seen that the theme has received, good buying interest. But yes, let's talk about some individual movers today. Coforge, definitely one of the stock in focus. The stock has declined by about 3.5%, but the company is in talks to acquire Encora in a transaction that is likely to be pegged at about $2 billion. Now, the news comes ahead of the board meeting later in the day to consider a fundraise proposal, post which the company will also be holding an analyst call this evening itself. Aamar, the stock has been on a slide from the past 1 month and not just today, 3.5% cut from today itself. So, what does the outlook look like for the company? Any reversal on cards?
No, I would say the stock is now definitely not to be looked at from a shorter term perspective. And even the longer terms of the longer term indicators are clearly pointing that the stock is now getting into consolidation phase. So the rally phase, which was there for the stock, that seems to be definitely over. And the stock is in for consolidation. Today's low is something which is some very important. I would say 1650 odd levels is something very important, crucial. If that is taken out, then the stock could witness a further correction towards the 1500, 1550 levels, which could be a good level for entry, but not at the current levels.
Okay, 1650, that's the first support zone for Coforge. All right, let's talk about another stock in focus. That is your SRF. The stock is flat as of now. It's off the day's high, but the stock did gain traction because India imposed an anti-dumping duty on a non-flammable gas, which is used as a refrigerant. Now, the additional dumping duty for 5 years is for imports from China, as the dumping was done at unfairly low prices. Aamar, coming to you, the stock, however, has been an outperformer this year and has even surged 11% over the past 1 month. What was the next target price that we can watch out for SRF?
So, see, if I look at SRF definitely has been a performer this year. It's up by almost 38-40% year till date. And monthly returns have been decent in excess of 6% or so. So what we are seeing is that the stock did make some very strong base around the 2800, 2850 level. Currently, it's around the 3000, 3100 odd level. So it seems that the stock will run in some sort of resistance around the 3200 level, because that was a high made in October of 2025. So that could be a level where the stock could meet with some resistance. But overall, the structure of the stock remains positive. That definitely is there. But since the rally has been quite sharp over the last few days, so there could be some pause or some consolidation. And upside resistance seems to be on the 3200.
All right, 3200 levels for SRF. All right, let's discuss about the food delivery stocks as well. Eternal and Swiggy, both the stock prices have declined today. Eternal seeing a decline of about 1%. Swiggy seeing a cut of about 2%, given that the e-commerce platform workers and the gig workers have launched a protest for better pay and work conditions. But yes, for Swiggy, the stock has been declining for 4 days in a row. Aamar, how are you placed on these two counters, and what do the charts tell us for going ahead?
The one thing is very clear from the charts that these, at least to start with, Eternal isn't going anywhere. At least in the short term, medium term, it's not going anywhere. It's in for consolidation. Post the major rally, because if you see the stock from almost 200 to 220 levels to be precise, rally towards 360. So we are seeing some sort of correction. Now it's back to 280 odd levels. Looking at the structure is clearly showing that it is in for consolidation. One should not expect a significant rally in the stock from here, at least from a shorter term perspective. And if I look at the levels to watch out for from a medium term to long term perspective, so somewhere around the 250 to 60 is a zone where the stock is likely to meet with very strong support. Otherwise, earlier it will be around 270 and then 250 to 60. But I would say it's not a good time to enter the stock at the current levels. And looking at Swiggy is again in for consolidation. Somewhere it doesn't breach the 370 odd level. So somewhere around the 370, 380 is a good support zone. So we'll have to watch out for that. If that is taken out, then the stock is definitely headed lower towards the 340, 350 levels. Upside for the stock for Swiggy is capped around the 420. So both of these stocks are clearly displaying that the rally, the one-sided rally which was there, that seems to be over. And we could now witness consolidation in both these counters.
All right, some consolidation and sideways trend could be on the cards for both of them. All right, let's shift focus and talk about one particular buzzing stock, that is your Panacea Biotech. Now, the stock has jumped nearly 14% and has touched the highest level that the stock has seen over 2 months. And the sentiment for the stock has turned quite bullish, given that the company has informed that the value of order from UNICEF has increased. Aamar, the stock definitely saw a good breakout today, but do you believe that the gains from today can sustain going ahead?
See, this is one stock which really hasn't performed well, except for last year where the stock had delivered strong returns. Otherwise, the stock is in for consolidation. This year itself, the stock is almost year till date returns are somewhere in negative of 2.5%. But we are seeing some positive move. Today is a very strong day, I would say, definitely, as you said. Volumes have been extremely high. So the big question is that is it going to sustain? So for that, I would say 415, 420 is going to be very important zone of resistance for the stock. It's around 410 odd levels. Sustaining above that level, then the stock definitely can rally, can witness a 10 to 15% rally from those levels. So I would say watch out for 420, 415, 420, sustaining above that level. The stock has a potential to rally anywhere between 10 to 15% over the next couple of weeks.
Okay, all right. That's the stock and in focus today. But yes, just less than 15 seconds to go before we get to the close. But yes, let's talk about the graphite electrode companies. That is your HEG and Graphite India, because both of the stock did garner some traction today. Aamar, how are you placed on both of the counters, given that both of them have seen some consolidation around that 500 to 550 zone?
Yeah, so if I look at Graphite India again, if you ask me from a longer term perspective, clear consolidation is being witnessed. So somewhere around 600, 610 on the upside is a zone of resistance, where on the downside support is around the 530, 540 level. So it's more of consolidation in Graphite India. However, HEG is better placed in terms of on the longer term chart. But again, this also is witnessing some sort of consolidation. It's around 560 odd levels. So somewhere on the 580, 600, that's a zone of resistance. On the downside, 520 is a zone of support. So more or less consolidation. But if you compare both the stocks, HEG is better placed.
All right, HEG better placed than Graphite India. All right, let's address the last rates that has come in for the screen. Nifty 50 definitely ending below that 26,100 mark. 2650 also the index has breached as of now. Sensex also seeing a decline for about 300 points, and if you look at the Bank Nifty index, that is also seeing a decline for about 100 points. So definitely Nifty for the week still managing to end the week higher, but still for today this index is down by about 0.3% decline. But yes, coming to the broader end of the markets, how the mid cap and small cap index has done after 5 days of consecutive rally that they have seen. Nifty small cap ending with about nearly flat with a negative bias. Mid cap index also seeing a decline of about 0.2%. Let's take a quick check of how the sectoral movers panned out then. We have Nifty IT index emerging as the top sectoral underperformer, seeing a decline of about 1%. It's third day straight decline for the Nifty IT index. On the other hand, if you look at the Nifty metal index, that has shown as a clear outperformer, seeing a gain of about 0.5% itself. Of course, we can see that the Nifty metal index has been one of the top outperformers for this week itself because the index has surged by about 2%. On the other hand, if you look at the Nifty consumer durables, that has also received some kind of a buying traction with about 0.2% gains. On the other hand, if you look at Nifty FMCG also ending the day flat but with a positive bias. Let's take now a quick check of the large cap movers on the Nifty 50 of what did well and what did not. You can see Titan doing well with about 2% gains, given that the company also announced its foray into the lab-grown diamond business. Nestle India also doing well with about 0.1%, nearly a percent gains. Hindalco with about 1% gains. NTPC, Sapla, the other gainers on the Nifty 50. But conversely, what did not do well in this market was your Asian Paints, seeing a decline of about 1%. Shriram Finance cooling off after 5 days of consecutive rally, seeing a cut of about 1%. TCS, Bajaj Finance, Tech Mahindra and Eternal, some of the other losers on the Nifty 50. But yes, Titan, clearly one of the top Nifty gainers today, given that the company has announced that they have launched a lab-grown diamond store in Mumbai along with new brand. The company also said that it plans to add a couple of more stores in Mumbai and Delhi in the near term itself. Aamar, the stock has seen quite a remarkable recovery if you look at from the September lows level. Do you expect expect the gains to sustain given that the stock has already hit a record high today?
Yeah, I would say if we look at Titan, definitely Titan had witnessed a sharp consolidation and then correction. But some of the technical indicators from the longer term charts, they have turned positive. So it's very important that the recent high or today's high is something which the stock is able to hold above. I would say 4,000 is going to, it's almost reaching there, sustaining our 4,000 level. The stock could be in for some very sharp up move, but gold prices are also significantly higher. So how that impacts the demand is something that needs to be looked at. But overall, the structure of the stock is positive, and as I said, a few of the longer term indicators have turned positive. So we'll have to wait and watch whether it's able to sustain over the 4,000 mark or does it consolidate and maybe it's a false breakout. So we'll come to know in a couple of weeks. On the downside, it's supported around the 3,800 level.
Okay, all right. 4,000 is the level that we need to watch out for. All right, just one last question before we let you go, Aamar. I know we discussed a range of stocks, but what are your top picks at this hour?
I would say one stock one can look at NBCC. NBCC India, we're seeing some sharp move today also, and over the last few days we've seen some sharp moves, and the stock was in for consolidation. It's reached that consolidation zone of 116, 118. Currently, it's around the 122 mark. Sustaining above the 120, the stock has a potential to rally towards the 130, 135 odd levels, and downside support for the stock is somewhere on the 112 odd level. So this is one stock one can keep a close watch on. And the second stock to look at is National Aluminium, NALCO, which I had spoken earlier as well. So this is one stock currently it's another 300, 305 odd level, very strong technically on the longer term charts, intermediate term trend. The big question is that the stop loss, the risk reward ratio is something that could be a cause of concern. But overall, the stock is very strong, has a potential to rally, witness a 10 to 15% rally also from the current levels. And the stock has got very strong support coming below the 390 odd levels. 290 odd levels. So one can keep a close watch on this as well.
Okay, all right. Those are the stocks we need to watch out for. But with that, we have to let you go, Aamar. Thank you so much for joining us. And once again, wishing you a very happy new year.
Thank you and wish you the same.
Thank you. All right, before we move on to our next guest of this show, definitely Nifty has extended its losing streak to about the second consecutive day, but still managed to end the week marginally higher. What has done well today is your Nifty metal stocks, which is continuing to soar higher, and for the week itself that the index has already surged by about 2% itself. But yes, the another sectoral mover for this week was your Nifty defense basket, given that they have outperformed the benchmark index and have ended by about 3% gains itself. Apart from the defense basket, it was the railway themes that have received good buying traction, and as a result ahead of the pre-budget rally, and as a result of which we can see majority of the railway counters which have done quite well, be it your RVNL, Ircon International, all of them have seen quite good gains for this week itself. But yes, one thing that is your flows that continues to remain weak, given that it's the holiday thin trade, and also rupee weakness continues to keep the FIIs away from the time being. Now, we did have an interesting brokerage note by MK Global where they have highlighted that the currency stabilization is quite crucial for the FIIs to make a comeback in this market as of now. And moreover, the RBI's efforts and defense of the rupee is spilling over to the tight liquidity, which has put the domestic flows at risk in the short term too. That's what the report has been saying as well. Now, while weak rupee, analysts noted, is a serious deterrent for the FIIs in 2026, other two factors are quite in favor. What the brokerage note laid out is that first factor, that is your earnings bounce back with upward revisions in Nifty EPS forecast, could be crucial going ahead. And secondly, the India's valuation premium versus the global peers have narrowed after this year's underperformance. So yes, we'll understand what else we should watch out in 2026. But with that, let's quickly get on board with our next expert of the show. We have Sandeep Bagla, CEO of Trust Mutual Fund, joining us, and to understand how the outlook looks like for the market next year itself. Sandeep, good afternoon. Wishing you the best of the new year. But this year, the markets have been quite narrow. So what would you say were the lessons of 2025, and what factors should investors watch out for 2026?
Hi, good evening. I think the lessons are very clear, I think everybody is not a fund manager. There is no respite in doing it yourself. So I think one should leave investing to fund managers who have, devoted their time, efforts, and money to, work on fund management. The biggest feedback that I get today is that, while the index level drawdowns are not very high, and the large caps have done quite well, lot of individual portfolios are bleeding, and that is primarily because one has started investing in direct equities, and it has really not paid off because you are not familiar with the principles of a diversification or risk management, or you are not able to differentiate between the chaff and the wheat. So I think the biggest lesson is that there is merit in investing with established fund managers and not doing it yourself.
Okay, okay. But Sandeep, this year has been the year for the precious metals, be it your gold and silver over the equities. So do you expect the trend to reverse in 2026, or will this go hand in hand?
No, I think there is no reason for trends to respect calendar boundaries. And just because it's December 31st, trends are not going to reverse. I think there are underlying factors which are more sustained and strong and might get stronger going forward. See, we must understand that precious metals are an effective hedge against inflation. And inflation is going to hit us in the first half of the next year. See, till now, there have been inventory drawdowns in the US. The biggest amount of sales happens in this period between Black Friday and after that till the January first week. And after that, the inventory levels are going to be very low in the US retailers. And there's going to be reordering, which is going to happen at a much higher prices. And that is when the effect of inflation is actually going to hit the US economy. And I think that will make people realize that inflation is a clear and present danger. And that is going to be a sort of a revelation for people. And I think it's not going to be a pretty picture.
Okay, okay. But Sandeep, with FI still remaining on the sell side and there's no progress on the trade deal front, do you believe that it's going to keep the currency rupee on the tenterhooks going ahead?
So, RBI is leaving no stone unturned for protecting the rupee, whether be it spot intervention or be it, borrowing from people who have the dollars for, period of 3 years in terms of dollar rupee buy sell swaps for 3 years. So I think at the spot level, rupee is at manageable levels. But one must see the rupee in forwards, which is the rupee that is being reflected in the by the forwards market after 1 year. The cost of hedging has already gone up to almost 7.5%. And nobody really buys dollar in the spots. All exporters and importers actually trade in the forward market. And I think that forward market is not a pretty picture at all. So I think the spot might be, protected by the powers to be an RBI, but it is the forward dollar which actually matters, and the forward value of rupee which matters, and it's already showing a 7% depreciation in 1 year.
Okay, all right. That is something that we need to watch out for. But yes, one theme that has been rallying from the past 5 days, that's your railway stocks. Sandeep, do you believe this is just a temporary buzz or are fundamentals finally aligning going ahead?
Sorry, which sector are you talking about?
Railway stocks. They've been quite a buzz from the past 5 days. You look at RVNL, IRCON, all of them, receiving quite a bit of buying traction. Do you think this is just a temporary buzz, or is this like the start of a reversal trend from here?
Very difficult to say, but I think the focus of government on capex is likely to remain in absence of a deal on the tariff side with Trump. I don't see we have any clear visibility on the tariff deals. So I think there is no choice but to spend domestically to prop up the economy a bit more. And I think the beneficiary could be on railways and probably these talks typically tend the rally tends to uh, drift away after a few trading sessions, but very difficult to say. But I think the focus on domestic capital expenditure by government is going to be there, So I won't be surprised, if markets go or take the railway stocks a bit more.
Okay, okay. Sandeep, what about the IT sector? I mean, for this week, the Nifty IT index has ended lower. We did have the new H1B visa rules, and the AI bubble that everyone was talking about also hasn't really busted so far. So, do you think the Indian IT, which was touted to be a beneficiary of this entire anti-AI trade, could see some sentimental hit going forward?
The anti-AI trade and the beneficiary being the likely IT sector is fairly hopeful in nature, I think. I don't think there's any connection to the AI-led infrastructure and software investments that are being made in the West are anyway connected to the Indian IT stocks. So I think there is no connection, there is no causality. There could be some amount of randomness, but I don't think if anybody is disappointed with the US tech and if there is a bubble which is going to be bust in any way that Indian IT stocks are going to get benefited. See, they might outperform the US IT stocks because they will fall more. But I don't think that there will be any sustainable rally in the Indian IT because the US AI is going to fail.
Okay, okay. But Sandeep, tell us your top three sectoral bets now that we have discussed about railways and IT as a theme. But what are your bets for 2026?
See, we are bullish on capital expenditure. We are somewhat constructive on capital markets. And personally, I think metals could be the wild card for the year. Metals have been going up because of weakening dollar. And I think there is a clear and present danger of inflation overshooting expectations. And, while regulators and policymakers want us to believe that inflation that will come because of tariffs will be one time. But I think markets will protect themselves and markets will believe that inflation is temporary only once they see it. In that period of uncertainty, when inflation is high, and I think precious metals and even other metals are likely to do well. So I think metals could be a big surprise for 2026.
Okay, okay. So does that make you bullish on the gold and silver rally as well? Because they've seen a good rally this year. And what does 2026 hold? A further
I
extension
think,
of it or certain consolidation? Yeah, your thoughts.
yeah, so I think everybody now is fairly bullish on gold and silver, maybe for the right reasons or the wrong reasons, but I think everybody wants to be a part of this rally. So, after a 100% rally on silver and 45% rally in gold, it takes a lot of courage to say that it will continue. And so I think the safe statement would be that it will consolidate. But I think the trend is very bullish. And I think one should not dismiss it and, one should not start taking profits in if you are still invested. So I think gold and silver, at least gold can definitely do well going forward.
Okay, okay, all right. Sandeep, what's your target for Nifty for 2026? I read some brokerage notes that had envisaged Nifty to reach even 30,000 for that matter. But from your perspective, any target on the horizon?
A lot of institutional money is coming into Nifty 50 stocks. And because of that, those stocks are not really coming down. And because the stocks are not coming down, FIIs are not coming in. Very difficult to hazard a guess as to what the level is going to be. I think the earning expectations are fairly low in terms of growth of earning expectations. But I think it's time for regulators to really think deep as to whether we need to limit the number of large caps that we have to 100 because the companies in the last 5 years have really increased in size and lot of money is getting rooted because they are large caps and they have mandates, investors have mandates to remain invested in large caps only. So I think very difficult to hazard a guess, but at least for the next 6 months I have a fairly bearish view while I can't put a number to it, but I think market will be in a range bound mode at best with a negative bias.
Okay, all right. A range bound market, that's what you're expecting as of now. All right, on that note, we have to let you go, Sandeep, but thank you so much for joining us. And of course, wishing you once again a very happy new year.
Happy New Year to you and your viewers. Thank you.
Thank you. Thank you so much. All right, it has been, once again a declining day for the markets because if you look at the Nifty, it is down by about 100 points, and of course, it's way below that 26,100 odd levels itself, and it's the second consecutive day of losses. But yes, so far this week, the benchmarks have still managed to end marginally higher, but the Bank Nifty that continues to underperform for the third straight week as of now. But yes, a good participation that came in from the broader end of the markets, and we'll watch out whether next week also we're able to sustain the gains that it came in from the mid-cap and small-cap space. But for now, we have come to an end of this edition of Closing Bell. It's a wrap from me. Thank you for watching and do have a very happy new year.